so let's continue to talk about the Fed. And there's been movement around the world lately about cryptocurrency being turned into legal tender. We saw it in El Salvador, of course, Bitcoin becoming legal tender. There are other countries now around
Nigeria now has the e-Naira.
Yeah, Ethiopia moving towards it. So there's a lot of different countries right now moving towards Bitcoin or cryptocurrency as legal tender. But the United States government seems hell-bent on really
not doing that.
Right, not doing that and trying to hurt crypto investors, specifically the IRS. And if you looked more closely at what's inside of the infrastructure bill, crypto investors are up in arms this morning, myself included, Natalie included. What's actually hidden inside this infrastructure bill about cryptocurrency? Exactly.
So what it would require is that people who receive more than $10,000 in cash and cash equivalents in business-like transaction file these reports with the IRS, including details about who paid them, such as names and social security numbers. That is not possible by very definition of a blockchain. A blockchain is anonymous and unregulated. When you get a piece of that blockchain, you don't know where it came from. It is not possible. So critics are now worried if this would force participants in crypto and NFT trades to have to disclose information that they just don't have. Does this mean that the government will say, well, you knowingly didn't disclose that, so now you get a penalty? What does that mean? It signals that either they want to punish something that they don't understand, which doesn't seem likely to me. I think they understand it, or they want to just flat out discourage it.
They don't want their precious U.S. dollar threatened.
Right. Yeah, exactly. So again, we saw this in China. China, right? So let's think about this. The U.S. dollar is the reserve currency of the world, right? It is the U.S. dollar is the standard by which all other governments operate.
Mm-hmm.
Well,
China is trying to
trade
become
oil. That's the big part of it. It's the petrodollar.
And China is trying to take over for the U.S. dollar. China has been saying, well, why are we relying on the U.S. dollar as our own
bellwether?
Standard? Yeah.
Yes.
Why don't we have the China yuan as the standard? So China has already done this, right? They've already banned cryptocurrency so that they've created their own digital dollar. They've created their own Chinese digital dollar. And they've said it's been a great success. They deposited,
I think it was like 14 billion dollars in transactions, something like that. We reported in the newsletter just last week. They're saying it's a big success. It is not a Bitcoin. It is not its own cryptocurrency. It is what are we calling them? Stable coin, because it's backed by, it is an equivalent of an actual physical dollar or yuan. And so that is what the European Central Bank now is saying, that they think in short order, the euro will move to some kind of digital currency. That does not mean the euro will go away. It means there will now also be a digital version. The United States has not wanted to do this. And I think one reason is, yes, they don't want disruption of their power of the central bank. Right. But also it would force them to admit that only 4% of the money in the economy right now exists in paper form, which means that 96% or more is already digital.
Right.
And so it's just not existing on a blockchain. It's just existing on this old infrastructure whereby we send money by wiring, high fee wiring, in other sort of expensive transactions, right? So you think about, the banks would really be harmed with their inability to charge us for transactions if everything were on a blockchain. Wall Street would be harmed. Like, there are a lot of people who make a lot of money would be harmed by a digital currency.
And think about just the little things like the banks do. So when they take your money, they take it immediately. But when you get a refund on a credit card, it takes 3 to 5 days. They gain interest on that money while it sits there those 3 to 5 days. Yes. That's why they do that. They could instantly. Right. So they don't want money moving instantly to people.
Correct. Or just on this old infrastructure. You think about the infrastructure bill, right? And the fact that we're so worried about like rickety bridges. I mean, that is the back end of our money transaction in the United States. And a blockchain would make that cheap and easy for regular people who want to, say, support grandma who lives in Florida by putting some money in their bank. Or, I mean, that's why we have these disruptor apps like Venmo or Zelle, but they have transaction limits because they can't handle those transactions without high fees being incurred. That will not happen. That's why El Salvador has been one of the first to adopt Bitcoin, rather, because they know so many El Salvadorians live outside of their borders and need to exchange money with family back home. And so it's like, oh, this would actually help people send money to each other, help people support extended family. No, we can't have it.
Right. And how many people are unbanked? So that's the beauty of decentralized finance, is that how many millions of people around the world that don't have a bank account. And think about the predatory practices in the United States where, hey, we're going to put a dollar store in here and across the street it's going to be a payday lending place. So you can come in with your paycheck and get a loan like a few days before you get your paycheck. We'll take 30%.
Right.
Right? So because you don't have a bank account.
Yeah.
So we'll take care of it for you, and you just pay us 20-30% for us to cash this check for you. The article points out, as this Fast Company piece says, about why this IRS provision would be so damning. That miners, stakers, lenders, decentralized application and marketplace users, traders, businesses, and individuals are all at risk of being subject to this reporting requirement by the IRS. Even though in most situations, the person or entity in receipt is not in the position to report that required information. This is an attorney who from the University of Virginia and a law professor. So again, decentralized finance or DeFi operations where automated smart contracts provide financial services could also be affected by this provision. It's amazing that how DOPIC. So right now people are saying like, look, you've got to get on this provision, this 6050, I provision in the infrastructure bill seems like a disaster. So Coinbase is really upset about it. And he says it's a criminal felony statute that could freeze a lot of healthy crypto behavior like DeFi.
So then you can't report where you bought something off of a blockchain and you get a felony.
Right. So now you're a criminal
because you just don't have it.
Because you don't have that information. So imagine like buying an NFT. Right. I mean, for instance, here's an idea. Like, there's a domain website. There's a domain registrar that's now allowing you to buy, buy URLs, like website URLs, as NFTs. Instead of having to renew a domain every year, like on GoDaddy, you would just buy it as an NFT and you would own it in perpetuity. Brilliant, right?
Yes.
Well, imagine that company now is going to have to figure out how to report all of that to the IRS, or you as a user of that blockchain are going to have to report this. I mean, it just makes it.
Yet all these billionaire companies have these offshore accounts that can hide money and do all this stuff, and they never see. Nothing ever happens to them. This is again just to go after this small investor that's making. They don't want people to have a savings account in this country.
Right. Yeah, so they're just going to go after these investors. They're going to go after $10,000. Like that's people who receive more than 10,000. That's a lot of people.
But yes, because a lot of people are using their investment funds, right? So investors are moving this money. Yes, but it's still I know it's a lot of money, but it's still smaller transactions. It's on the lower end of what people transact. And so it would be aimed specifically at not the big banks, those who are not in power.
Well, they're saying, hey, we're going after money launderers. That's that's what we're trying to do is stop the money laundering.
Yeah.
Right. We're going after money launderers. We're going after the billionaires with the taxing knowing the $600 transactions. We only want the big bad guys. Right.
But by the way, money laundering as if people haven't been money laundering for decades
with actual money
in the Bahamas and other places.
It just feels like a new thing. They're just trying to equate crypto to criminality. Like they just want you to think lower of crypto and not think that it's something good. So you're going to have a bunch of people that read that article and be like, no, crypto's bad. It's going against the US dollar. People are just laundering money. And
well, it's a threat. I mean, and the bottom line is it's a threat to the US dollar. The U.S. dollar as this hegemony, right? The financial reserve currency of the world It's a threat to that. And imagine if the United States government, $28 trillion in debt. And you have Americans saying, we're sick of this. This is a phony currency. It's printed out of thin air. It means nothing.
You keep stealing it from us.
You keep stealing. Yeah, you keep stealing it from us. You keep printing more of it and giving it to Wall Street.
Yeah.
The cost, when I take this dollar and go and buy bread, now it only gets me half as far as it used to. And imagine if Americans suddenly say, no, you know what? I'm going to start using Bitcoin.
Yeah.
Which as a store of value, we've seen 400% increases year over year.
Right.
It's like we keep loaning our money to people with the drug problem.
Yes.
Yeah, and by the way, Bitcoin,
we're enabling their spending
you
habits.
were about to say Bitcoin hit a new all-time high.
How'd you know that?
Because I could read your mind.
Yes, I was going to say that.
I married you for your mind. It hit a new all-time high today, 68,000, and Ethereum also hit a new all-time high today. So, again, if you have a choice of where to put your money right now, do you want it in this corrupt government dollar backed by these crooks on Wall Street and the Federal Reserve and the Treasury, or would you rather have your money in a decentralized blockchain where every transaction is accounted for?
Or would you rather have it under a mattress?
That's a good question.
Combination.
No, I'd rather have it on the blockchain. Let us know your thoughts on this in the comments below. All right,
I want to have some under the mattress just in case, because you never know when you might have to leave in the dead of night.
It's true. You should have. I think we should have some precious metals, gold and silver and things like that. But did you see that Ethereum? Is it Bitcoin? No, Ethereum is now nipping at the heels of silver.
Wow.
It's that close to replacing, or am I getting that wrong? Is it Bitcoin? I read it this morning. That Bitcoin is closing in on gold, by the way. But Bitcoin is as close to moving into that asset class now, where it's about to eclipse silver as an asset class.
Wow, that's interesting.
Yeah.
You know what shocks me is that companies like American Express or somebody like that isn't stepping up and creating some kind of system around crypto to
their asses handed to them.
Yeah.
This is where Square. This is why I'm so bullish on Square. Jack Dorsey's company, because while you have all these legacy institutional banks that have sat there and thought it was a fad, now all of that, this morning, the numbers on institutions buying up Bitcoin is staggering. They are swallowing it up. They're trying to buy as much as they can because they realized this was a huge mistake. They missed the boat on this. And so now, you have all these big banks jumping on board to make sure that they own this as an asset class. But Jack Dorsey and Square and some of these startups have had smarter moves with creating, Square owns Cash App, and so being able to have these transactions take place on their platform. They're screwing, Visa and MasterCard and these other companies are just getting screwed right now.
Yeah.
I did not realize they own Cash App. I love that app. That is one of the cleanest apps I've ever used. Yeah, I love it.
Yeah, they just reported their Q3 earnings. Square did last week, and they had 2% of their revenue now coming from billions of dollars in transactions coming from Cash App. So Square has added that revenue to their portfolio.